Hi, this is attorney Tony Ramos with a question that I get asked very often from my clients. How can I pay the IRS less than what I owe? A lot of clients have the idea that you can negotiate with the IRS like you would with a businessman. A very common thing that they ask me is, just offer them 50 cents on the dollar, let's see if they'll take it. Unfortunately, the IRS doesn't work like a businessman. Another question that gets to the same thing is, can you just eliminate all the penalties and the interest and I'll just pay the tax? Again, unfortunately, the IRS doesn't work that way as well. So what I'm going to do right now is cover 7 ways that you might be able to pay less than what you legally owe. This is not legal advice. You make sure you speak to an attorney. But generally speaking, these are the main 7 ways you can pay less than what you legally owe. The first one is what we call currently not collectible status. By providing financial information to the IRS, they sometimes reach the determination that currently you cannot pay anything. So they'll leave you alone for a year, 2 years, and they examine your tax returns to see if you're making enough money to start making payments. Obviously, if you start making more, they're going to ask you to pay something, but if you're paying less, they'll leave you alone again. And sometimes it can go on for many, many years. And I'll cover this in a little bit, but the IRS only has 10 years to collect. So during the time that you're in currently not collectible status, the clock is running on the IRS. The next one is called partial payment installment agreement. Installment agreement is another word for a payment plan. And similarly to the currently not collectible status, the IRS makes a determination you can't pay your taxes in full, so pay what you can afford. And that's why it's called a partial payment installment agreement. When the 10-year collection period is over, oftentimes in this type of arrangement, you will not be able to pay off your tax in full. And partial in that, as opposed to a full pay, you would have to make higher payments. And also, like currently not collectible status, they review your financial information when you file your tax returns. If you're making more money, they're going to want you to raise your payments. Conversely, if you're making less money, you can negotiate a lower payment. The third way that you can pay less than what you legally owe is what's called offering compromise. You've probably heard advertisement that says, pay pennies on the dollar, and you end up paying a lot less, sometimes 1 penny on the dollar, sometimes 50 cents on the dollar, just depends. But basically the IRS looks at 3 things when you make an offer in compromise. Number 1, you look at the 10-year collection period to see if what you're going to offer them is more than what they think they can get from you during the 10-year period. Secondly, they look at the net value of your assets. They want you to offer at least the net value of your assets. So if you own a home, the equity in the home is what you need to offer. The good thing is that the IRS knocks off 20% off the top the value of your home, so that, let's say for example your home was worth $300,000. The IRS will knock off $60,000, so they're only looking at $240,000. And if you had a loan of $230,000, your net equity would be $10,000. You have to offer that. And then the third thing you also have to offer, in addition to your net equity and your assets, is income left after reasonable, what the IRS considers reasonable. Reasonable living expenses times 12. So let's say in this example, you can afford to pay $500 a month. Times 12, that would be $6,000, plus a $10,000 equity in your home. Your offer would have to be at least $16,000. And so you would have to set in 20%, and then when it's approved, usually takes more than 6 months for approval, you would have 5 more months to pay the rest. In some instances, you're going to have the option of, instead of paying 12, you pay 24 months. So instead of $6,000, it would be $12,000 in addition to the equity in your home, but you would pay it over 2 years in 24 equal payments. The fourth way that you might be able to pay less than what you legally owe to the IRS, and I've already brought this up before, is that the clock runs on the IRS. They only have 10 years to collect, and after that, the debt is written off, forgiven. Now, there's a few things that can extend the 10-year statute of limitations. For example, if you file bankruptcy, during the time that you're in bankruptcy, the clock stops, and then for 6 more months after you get out, and then the clock resumes. If you leave the United States, if you live outside the country for more than 6 months, the clock stops. if you appeal a threatened levy, some kind of enforced collection, during the time that the appeal is pending, the clock stops as well. But some people come, they've been able to avoid the IRS collection efforts for years, and there's only 2 or 3 years left, and all they can pay is enough to reduce a part of the debt. So that's one way that you can legally pay less than what you owe the IRS. Another is called innocent spouse relief. There's 3 subsections in the Internal Revenue Code, but basically, if it's not fair for you to pay taxes that your spouse incurred, usually this is when your spouse underreports income and later gets assessed an additional amount, or the IRS denies certain deductions that your spouse took. As well, you need to be able to show you didn't know or didn't have reason to know about the underpayment or the failure to pay the taxes. This is a lot more complicated issue, and I'll have a separate video on that. But sometimes you can claim innocent spouse relief, and the total amount of tax remains the same, but it's not yours. It belongs to your spouse or your ex-spouse. The 6th way that you can pay less than what you legally owe is what's called abatement of penalties. Abatement's just a word meaning reduction or elimination of penalties. And the penalties that we're talking about reducing are primarily failure to file and failure to pay. Failure to file incurs a 5% per month penalty of the tax owed, up to a total of 25%. And failure to pay, you would incur 0.5% a month, also up to 25%, although they can't exceed more than 5% a month. So essentially, it would be a total of 22.5% for the second one. But these penalties can be reduced in basically 2 situations. The first one is called first-time abatement. The first year that you owe, or the first tax period that you owe money for, so long as you didn't incur a penalty for the 3 years before that, you're eligible to eliminate the failure to file, failure to pay penalty. And the other way to eliminate penalties is what's called reasonable cause abatement. Something has to have happened to you that was beyond your control, like an illness, you got bad tax advice from your CPA, or things of that nature. Your records got burned in a fire. But if you're able to do that, this is one way that you can pay less than what you legally owe, because not only do you owe tax, penalties and interest also accrue, and you would legally be obligated to pay those as well. And finally, the 7th way that you might be able to pay less than what you legally owe is filing Chapter 7 bankruptcy liquidation. Now, in order to qualify, we're talking about income tax, not trust fund taxes. For example, if you own a business and you withheld payroll taxes from your employees and didn't pay them, those would not be dischargeable. But ordinary income tax that was due more than 3 years ago can be discharged in Chapter 7. Now, if the IRS has filed a lien, then the lien would survive bankruptcy. But generally speaking, after you've owed your income tax for 3 years or more, and so long as they've been assessed 240 days, they are dischargeable in bankruptcy. Like innocent spouse relief that I mentioned a while ago, this is a lot more complex topic, but sometimes taxpayers qualify for that. So if this information interests you and you'd like to have a free consultation, call the phone number on the screen or go to my website, TonyRamosLaw.com, and we'll talk to you soon.